Well, as mentioned, Tesla traded lower after 6 of the last 8 reports as it continues to be the lagging stock of the Mag 7 cohort. But technical indicators could be spelling out a slightly bullish bias at this point. Let's break it all down with Jay Woods. He's the Chief Global Strategist for Freedom Capital Markets. Jay, it's great to have you here on set. So let's start it off with, is this going to be the quarter where maybe things change a little bit for Tesla?
It's hard to think they are. The stock rallied 35% into that robotaxi announcement on 10/10. The announcement that was supposed to be on 8/8. Things got delayed. There are some positives technically. The stock has broken from its long-term downtrend from its November 2021 high at 400, but it's still 47% off its all-time high. It's the worst performing stock in the Magnificent Seven, down 11% year to date. As Josh said, I don't even consider it one of the Mag 7. Give me Netflix, give me Eli Lilly, give me Berkshire. Let Warren Buffett get in there. But from a tech perspective, it has been trading on hopes and dreams, and now investors want a show-me stock, and these results have been lacking. The rollouts have been less than spectacular, but let's talk technicals. That's why you had me on. It's a volatile stock during earnings time, up, plus or minus 7.5%. And I expect that volatility to continue. So when the numbers come out and that conference call goes on, because the conference call, as Josh mentioned, Elon Musk is great at pivoting, great at steering the ship. It could subside, but to the upside, I want to see it rally back to that 265 level where it struggled to get above. I don't see it getting back there, but it can neutralize and go sideways for a little while because the downtrend has stopped. Now, these moving averages, these 200-day moving averages, they haven't really held well in the stock historically. But watch the recent low before the run-up into robotaxi around 182 on a downside. So we have wide ranges. This is great for the day and swing traders in our audience, and you may want to wait this one out until it makes its move and then get in. But to me, it's a coin flip on how it's going to react during earnings. But the recent trend has been up, even though it's still down 11% for the year. So it's one to watch. Bring your popcorn, but I do not have a position in it, nor do I recommend one going into the earnings.
But given that you say bring the popcorn, it tells me this is obviously a very story-based stock. So given that, how much can we rely on the technicals to tell us what's going to happen with Tesla?
Well, to me, it's more like Bitcoin, where you rely on the technicals to trade it because the fundamentals have been lacking. It rallies on hopes that this next rollout will be big, that these robots will be bringing Josh drinks and my friend to watch TV with me on the couch. That is a hope and a dream. The reality is we don't know when the rollout's going to come. We don't know how big it's going to be to its bottom line. The Cybertruck was delayed. When that was rolled out, the mileage was less, the price point was higher. So we've been disappointed time and time again. So the only way I look at it is technically, and right now it's in no man's land, and you may get a reaction. If it rallies, I would probably short it at its 262, 265 level. Going into it right now, no, I would not buy it. I would not short it, because if it pulls back, watch the 200-day moving average, watch 200. Psychologically, we like these round numbers. But 182, 185, the recent lows before the robotaxi rollout, you may want to dip your toe in the water if the worst is over and the stock can stabilize. But the fundamental story is very tough to follow because the numbers are never consistent and they keep getting delayed.
Jay, what would be the level that would signal to you that the worst is in fact over?
Oh, and this is where technicians get a bad rap. If it goes above 265, I will buy it if it goes up $40 and it can hold that level. If we see a gap up and then it holds that gap, that to me means something has changed and I want to be in the stock. And then it sets you up from a risk-reward perspective, because if you're trading this stock, then you want that risk to be limited. So if it gaps up and can hold, then you use that buy entry point where it gapped as your stop to get out if it pulls back. So it's more of a trading stock. The long-term investor, if you believe in Elon Musk, if you think Trump's going to win the election, then you're going to have a tailwind, and this stock is off to the races. But I don't know. You've been disappointed too many times where I think there are better places to put your money. Look at the Magnificent Seven. Those 6 other stocks, they've all made new highs. They're all trading near all-time highs. That's where the technology story happens to be. Tesla had its moment in the sun, but to me, it's more like a Cisco and an Intel during .com, where it peaked out, and now we're moving on to other things.
Can we talk about some of those boring old school names for a second? Because we've got IBM today, and I was talking to the CFO of Intuit yesterday about this, how Cisco, Oracle, these are becoming the new hot AI names. What's up with that?
Yeah, people forget about old Big Blue. That was the biggest stock on the floor when I started there in the, well, don't worry, when I started there, a while ago. But Big Blue is back. It's a 42% year to date. From a technical perspective, look at a 10-year weekly chart of this stock. It based and broke out. Now, it's a little far out over its skis technically. I could see it having a solid quarter and pulling back like a GE Aerospace, which was up 90%. Quarter wasn't bad. It pulled back. Totally different sectors, but I'm looking at the price action. But IBM, over the last 10 years, 50 acquisitions. Where did they build out? They're not your mainframe company anymore. They went to cybersecurity, to the cloud. So this company is growing silently under the radar. They don't have a magnanimous CEO that's going out there making headlines. They're just hitting their metrics quarter after quarter, and I expect them to hit their metrics again. Will it follow through in price action? I don't know. It's kind of overbought right now, but over the long term, I think IBM is back and a safer tech play that you can go, put in your portfolio and leave and not worry too much about it. They've been consistent, so I love IBM.
Jay, what is the name that you think should maybe be in the Mag 7 if we were to take out Tesla? Is it a name like IBM? Is it a name like Netflix? I guess, how should investors maybe be thinking about it?
Well, considering all NASDAQ stocks, it has to be Netflix, right? No, Netflix, we talk about earnings growth, we talk about a dedicated user base, we talk about a story, and we talk about a pattern that followed the other 6 stocks. They had a rough 2021, 2022, it rallied back. It just broke out to new high, 762. That 700 level was key. It gapped up, and now it looks like it wants to take that leg higher. I question if the user growth is going to continue to be there. They've done some great things with that crackdown. I mean, I'm getting emails from my kids constantly, Dad, what's the password? I can't get on. So eventually they're going to have to, buy your own, kids. But Netflix to me, but Eli Lilly, when you talk about a long-term growth story and what they've done there, that is a great stock to just kind of own, put away, growth story. And then Berkshire Hathaway, let's be honest. Uncle Warren, he's king, and what he does consistently over time, there's no more magnificent, slow and steady approach. But if you're talking tech, innovation, trendy, then give me Netflix to your Magnificent 7.
I like it.
All right, Jay, it's always great to have you. Thanks so much for having on with us in studio. Jay Woods, great to have you. Thanks so much.